What do you mean by commercial tax? Commercial tax is a tax imposed on the scheduled commercial goods as indirectly collected by the seller or purchaser against his business transaction, which now comprises of sales tax, entertainment tax, luxury tax, entry tax, and profession tax. What is income tax? Income tax is an annual tax charged on income of a person by the government. How income tax is charged? It is charged for the corresponding assessment year at the rates laid down by the Finance Act for the assessment year in respect of the previous year. How income tax is calculated? Income of the person is categorized under the following 5 heads: salaries, income from house property, profit and gains of business or profession, capital gains, income from other sources. Income is calculated under these heads separately, and accordingly tax is calculated using the income tax slab issued by the government every financial year. Define financial year. A 12-month period starting from 1st April and ending at 31st March, which is used for calculating various annual financial statements in businesses and organizations, is known as financial year. Which income is considered as accrued income? Income which has been earned but not yet received is known as accrued income. Income is recorded in the same accounting period in which it is earned rather than in the subsequent period in which it will be received. What is tax audit? A tax audit is assessment of an organization's or individual's tax return by Internal Revenue Service in order to find out that the income and deductions are recorded accurately. What is tax refund? The excess tax paid by an individual than the actual owed is returned by the government, which is known as tax refund. After taking into consideration income tax withholdings, tax deductions or credits, and other factors, you file income tax for the year. After that, you will receive a tax refund. What is deferred tax? A tax liability that a company has to pay but does not pay at the current point, and it will be responsible for paying it in the future, is termed as deferred tax. Deferred tax occurs due to the difference in a company's balance sheet due to the differences between accounting practices and tax regulations. What is working capital? Working capital is the difference between a company's current assets and its current liabilities. Working capital is used into day-to-day operations of any business. The formula for working capital is WC equals CA minus CL. What is taxation? Taxation is one of the modes used by the government to finance their expenditure by imposing charges on citizens and corporate entities. Government levy tax on citizens to encourage or discourage certain economic decisions. Explain deferred tax asset. When a firm has overpaid on taxes, then the amount is recorded in the balance sheet as deferred asset tax, which is also known as provision for future taxation. Deferred tax asset arises when the firm pays taxes early or have paid excess of tax and is entitled to get some money back from the tax authorities. If a NRI buys a property in India, does he has to pay property tax? Any income or capital gain that the NRI generates from the sale, rent, or lease of a valued property or an asset based in India will be taxed as per the income tax rules. If the property is more than 3 years old, long-term capital gains tax will be accrued on the sales of the property. On the long-term capital gains, tax is payable at 20%. What is luxury tax? A tax imposed on goods and services that are non-essential or not included in the necessities. Luxury tax is included in the indirect tax and is incurred by those who purchase or use the product. Ad valorem tax or progressive tax are some luxury tax that is imposed on high-priced goods such as cars above a certain value or engine size, villas, etc. What do you understand by transfer income? Transfer of income means when someone retains the ownership of an asset but makes an agreement to transfer its income, but still the income is considered as your income and it will be added to the total income.